Okay, very good evening to everyone. Welcome to today's hybrid seminar. So we have a live audience in front of us, and we also have online audiences as well. Okay, before I begin, I just want to check whether the online audience can hear me. Okay, good. I got, I think, very clear. So once again, thank you for joining us tonight for this part two of the three parts sessions. I think we have the first session. Okay, the three parts will be money, method, and mind. Here on top, you can see the screen, money, method, and mind. We have gone through the first part in February, money management. So it's about risk management. And today is part two, the session where we were talking about trading strategy. Okay, so I think today will be quite interesting. Mr. Tom will be sharing with us the method he uses to analyze markets. But before we begin, right, just maybe allow 5 minutes of your time for me to do a short company intro, as well as to share with you some of the exciting promotions that we are having right now. Okay, so Phillip Capital Group is established in 1975. We are part of Phillip Capital Group, okay, and we have grown into an Asia financial house. Headquarters is in Singapore, and now we have operations in 15 countries, including Australia, China, France, India, Japan, Malaysia, and you can see US and other countries as well. So all the services that we offer right now, if you talk about Philip Nova, we are inaugurated in 1983, and we are a brokerage firm. So we are offering different kinds of assets class, as you can see. Previously, we were called Philip Futures. Okay, we were named Philip Futures because we specialized and started off with futures and forex. But right now, we have more suites of product. For example, stocks trading. You have ETFs, forex, CFDs, futures, and options, global indices, commodities. Okay, and so these are the range of products that we offer currently. That's the reason why we changed our name from Philip Futures to Philip Nova, because we right now, if you call ourselves Philip Nova, people think Philip Futures, people think that we only offer futures contract, but we actually offer much more right now. And this is the latest, I would say, product or service that we launched. Okay, for US shares and Singapore shares, you can have margin financing. Okay, and the rates for US shares, right, is one of the lowest in town, 4.5% per annum. Okay, so if you are trading US shares and you are looking at margin, right, then this is probably the right product for you. Other than that, because today we'll mainly be talking about futures related. Okay, so let me share with you some promotions with related to futures. This is, I would say, a real collaboration with SGX that no other brokers have. We are offering one of the lowest rates here in town, especially in the SGX indexes. So for example, Singapore, China, Taiwan, Indonesia, and Vietnam. Okay, so if you trade this product, you have a special rate. So if you are in Singapore right now, right here with us, you can scan the Singapore attendees to see more details on the rate. And if you are in Malaysia online, you can scan the Malaysia QR code, okay, to take a look at the promotion. Okay, I'll just leave it here for a few more seconds so you can scan. Okay. Other than that, if let's say you have any questions, I'm from the client relations team. Okay, and sorry, did I introduce myself? My name is Simon. I think I forgot to introduce myself. I'm Simon Teo from the client relations team. So this is our email, and we have a WhatsApp. So if any questions, feel free to WhatsApp to us. Okay. And just now I mentioned, right, this is a 3 parts session. So today is the second part. The third part will be happening in 2nd of June, 7 p.m. evening, same place here. We'll be talking about mind, which is trading, psychology, and discipline. All right, so if you're interested to sign up, later we'll flash this again. So after this session, if you think that you want to sign up for the third session, you can use this QR code here to sign up for the third session. Okay, so with that, I would like to invite Mr. Tom, our speaker today, and I think he will do a better job of introducing himself. So I'll just pass it to him. Thank you very much, Mr. Tom.
Hello, good evening. to my live audience as well as online people. I proposed the idea of doing a hybrid to Philip, but I didn't expect it to be taking place in this session. I was told only on Sunday, 2 days ago, there's going to be a hybrid. So, wow, luckily they informed me, because otherwise, nothing really special. It's just that I am a very direct person and very candid. I talk, I share, I voice my mind, my opinion, which can be disastrous if things are online. So I prefer live audience whereby I can talk about anything that is not recorded, right? So since they told me it's going to be live, it's going to be hybrid and recorded, I just had to be a little bit mindful on what I say. Okay, so I do not have the chat, so I do not know what you will be asking or talking, but I do interact with my live audience. So some questions I would typically like to ask. Before I introduce myself, I would like to know about my audience. Now, how many of you, please do respond, are seeing me for the first time, live audience? Wow, I do have half of you, right? Now, this is the part 2 of a 3-part session. How many of you have attended my part 1? Okay, I still have this few, right? Good enough for them to come back for part 2. Let's see whether if they come back for part 3. Okay, so basically this is the session 2, whereby organizer mentioned I'll talk about money, method, and mind. So I started with money management in session 1. Don't worry if you miss. Later I'll do a very brief wrap up so that you can still catch up with what it is. This session I'll talk about method. All right, this is the first session where I talk about money management or risk management. So before I continue, typically I will need to show this. You can see that this is a SGX template. So I started doing training for SGX since 2009. The first of a kind. They have education department doing things on stock and shares, but when the floor closed, they asked me to help them do education on futures trading. So since 2009, I started training for them, and it has been 17 years. Wow. All right. So typically for trading, you would need, or rather they would need to show this disclaimer to remind you, especially from me, what I'm about to talk about is considered high risk, right? Trading, derivative, futures. But I do want to complement with my own 2 words called high return. So these 2 words are very important, because if you ignore one of them, it can be disastrous. If you ignore risk, you'll be carried out in a stretcher. I guarantee you that. But if you ignore return, then you'll be so scared you dare not trade. There's no motivation. So to balance these 2, every step of your way is very important. So that is how I would like to summarize in my own way instead of reading whatever this page says. Okay, so if you were to ask me, hey, so is it high risk or high return? I would say it depends on you. Now, so in a very candid way of sharing for my years of experience, this is not a formal presentation, so to speak. I do it in a very candid manner. So it's about, in Chinese, they call 三观, right? Translated English, my value system, my belief. So I share with you. If you do not agree with anything that I say, let's not argue. You live your life, I live my life, all right? But if you do agree with whatever I say, then I sincerely hope that whatever I share with you tonight would benefit you in whatever ways. Okay, so this is in part session 1, the 3 pillars, whereby I would talk about the 3 M's. The 3 M's are mind, method, money management. Trading, right, is equivalent to fighting a war. Literally. In a war, people die. You should know because it's happening in the world now. So therefore, in a war, right, to win, you need these 3 components. So the war strategy would be important. That is what we call in trading the method. Now, you need ammunition. I think it's very obvious now, right? When you follow what is happening in the Middle East, you cannot keep firing. You need to replenish. So you finish firing already, your weapon, but you have no ammunition. So in trading, it's the same thing. Ammunition means how deep your pocket is, whether you have risk capital or not. So you have to manage this limited risk capital that you have in order to multiply them. All right. So this is the part of money management, which equivalent to managing your bullets, in terms of war strategy, which I covered in session 1, right? But the most important, as far as I'm concerned, is the mind, the psychology, because this is the part that play out the strategy. This is also the part to manage the bomb, yeah, in order not to anyhow very short, right? I bomb just for fun, yeah, quoting someone lah. Okay, so therefore, to give you a quick rundown of what I did in session 1, this is the whole thing. Now in the summary page, yeah, so I repeat what I've done in session 1, whereby from the host they talk about a new feature which they have, a OCO order, right? That means when you put on a trade, you need to define where you want to take profit. You need to also define where you want to cut loss. So basically, this is already factor in the risk management portion already, yeah, where you want to make money, how you want to define your risk. Now, then the important thing is on know thyself. I have as a newbie, I joined the floor. Well, anyway, I'll introduce myself along the way, as I thought you will start to find out about me instead of giving you a formal definition or rather introduction of who I am. So as a newbie, in 1992, I joined the floor open outcry trading as a newbie. So I thought that is the path that most people would walk through. Until when I started education in 2009, when I started to talk about trading futures, then I realized that majority of the people actually are not aware of this aspect, right? What is on your on the right? Most people have experience doing this. So therefore, I need to, over the last 5 years especially, I spent quite a bit of time orientating my audience so that you would switch your mind from here to more align with me in order to benefit from my sharing, right? So this is important. I've done this in session 1. I will repeat this portion in session 2. Yeah, later I'll do that. So this is the part on know thyself. Now, the first session is on risk management. So among so many kind of risks, yeah, I actually zoom into just talking about market risk as well as leverage risk. All right. So leverage risk, of course, for futures trading involve margin. Margin trading is implied there is leverage involved. Yeah. All right. So also, in terms of money management model, this is one of the most important model whereby you need to understand the two important ratios: risk reward ratio versus win lose ratio. You plot these two together, basically this is the break-even line. All right. If your outcome, your strategy happen to be on top of this, that means you have a positive expectation. You have an edge. If you don't have, you fall below this, basically you will lose money, right? So anyway, for people to improve their trading performance, yeah, many people in theory feel that, oh, I can try to improve on this part, improve on this part, but practically it is not possible. There are other reasons involved, including psychology, which I will not elaborate too much over now for this session. So understanding this, all right, the next thing is in the part 1, after understanding all of this, right, I go into a case study whereby I actually show them one of our top trader in our community, how he caught this down move and he caught this up move. In about a week's time, he made $1.3 million. All right. So in this example, in part 1, I explained from the perspective again of money management to talk about how much are you willing to risk in order to gain that kind of money. Yeah. Now, so today I will be repeating this same case study, but I will share with you from the perspective of method. Yeah. So that at least, especially if you've gone through session 1, you have a better perspective, understanding the risk management portion, as well as understanding the method involved, right, for gaining that kind of money within that kind of time span. All right, in part 1, in the session 1, I summarized the whole thing by giving you the analogy of extreme sport. Because I remember when I was new, I read a lot. This lady from America, one of the wizards by the name of Linda Rushke, people ask her, what advice, what kind of books would you advise traders to read in order to help on our trading? Her answer is read books on sports psychology, yeah, not just normal sports psychology, especially professional sports, extreme sports psychology. There's a lot of relevance. So incidentally, when I was doing the part 1 2 months ago, this event just took place, which can also be considered an extreme sport, right? By the way, live audience here, how many of you are aware of this? The free solo 101 climbing the Taipei, yeah. Now, so therefore, after this event, there are a lot of write-ups. I follow one write-up that is very, very good, because this fella talk about the relevance of risk. A lot of people say, wow, what if he missed one step? He's going to die, right? So that write-up actually talk about there are in Chinese. So basically, 排念到恐惧不再模糊，排念到身体比情绪还快。Right? Basically, he trained until fear is no longer hazy. Yeah, he trains until the body reflexes appear faster than emotion. No time to be scared. So therefore, when you want to trade, you say, hey, I'm scared. That means you have not trained enough, yeah, until you have the body reflexes. All right. So these are the things which I did in session 1. For those of you who have attended session 1, I hope it's a good recall. For those who have not done session 1, anyway, just to briefly let you know the outline of how I spend at least 1.5 hours, yeah, for session 1 to cover all those details. So with that, now I go on to session 2. All right. So back to this, yeah. This model whereby we talk about how in a war, you need to manage your bullets, which I covered in session 1. So this is when I talk about developing a strategy, right? Your strategy, a war strategy or trading strategy. So after intro by host, now I want to talk about the know thyself again. All right, this portion which I mentioned just now, since 2009, I started to talk about this. And I realized, and especially after doing with Philip Nova for so many seminars, webinars, they gave me a feedback, SJs as well, right? They're talking about how to encourage participants to have follow through action, meaning that after attending a day, you don't just, whether you like it or not, you go back and then you do not trade. Now, we're not trying to push anyone to trade. After doing so many years, I realized one thing. People do not trade because you are not aligned with me. There are so many ways to make money in the financial market. There are also many ways to lose money. So basically, most people belong to this group. They invest in stocks using fundamental, right? So therefore, if you are very experienced with this, whether you make money or not, you come to listen to my session with this mindset, that is when you go back and things the same. Now, whether you want to switch or not, you have to take note of my background. This is where I introduce myself. By training, I was a software engineer. I graduated in 1986. Well, I can't remember really. 1986. You're not born yet. 1986, the first batch of computer science in NUS, right? So I worked in a not Ministry of Defense. I worked in DSO, Defense Science Organization, sent overseas for job attachment, came back, served my bond. After that, okay, I cut the details. After that, I started to realize that I do not like computer science. Fortunately, I discovered early enough because when you do not like something, you basically, it's going to be a miserable life. So I start to realize, hey, I like the financial market, and therefore I quit my job. In 1992, I joined the floor. Now, this is something that most people do not understand. They will ask me questions like, so what is your basic pay? Yeah, how do you service clients? How do you charge commission? When I joined the floor, this is a place whereby it's not employment. In a very candid manner, I take my savings and I go to this world-class casino called the financial market, and I bet on the numbers direction. If I get it correct, that is my income. If I get it wrong, either girlfriend or parents, hey, please give me money, like boldly. Yeah. So that is what I did in 1992 until today. Right? So that is what we do as floor traders. I'm still wearing this jacket. I remember in my 17 years of training, in one of the sessions, I had an Indonesian lady coming to my class. Yeah, she was frowning and frowning and frowning, and then suddenly she can't take it. She said, "Which normal guy can wear a red blazer?" Yeah, I say, "This is not a normal red blazer. This is almost like you go and ask a commando, hey, why do you keep wearing a red beret?" That is our pride, right? That's our pride. Now, so therefore, this is what I do. This is what I do, and typically people say, "Hey, Tom, where are you? Where are you? Where are you?" Zoom it a bit more. That is where I am. I looked like this in 1994. Okay, so that is like how many years ago? Now, the proof of how long this has been is because that guy is standing next to me. If you recognize him, it means two things. Either you are senior enough or you are knowledgeable enough. The fellow by the name of Nick Leeson, who single-handedly brought down bearings in 1995. All right. So basically, this is what I do, and this is what my sessions would be all about. Okay. Now, so basically, I used to, over the last from 09 all the way till COVID, I used to share 3 points to make people understand the differences. Yeah. But about 2 years ago, I started to elaborate more. All right. So we talk about the 3 points first. 1, 2, three. Okay, these are the three differences. First point is investing is long term, trading is short term. If you want to talk about investing, think of Warren Buffett, then it's easy, right? How long is long? He buy and hold very, very long, very, very long. Can be long until this word called forever. Yeah, so that is how long it is. Now, how short is short? Floor traders, we do this thing called scalping. When we see an opportunity, we shout buy, and then next moment with a profit, with one or two ticks, because we do in size, yeah, we will sell. Our duration can be in minutes, it can be in seconds. So that is how short. Can you see the extreme? From one extreme of forever to the other extreme of seconds, right? But for today's context, maybe it suffices to take note that trading, many people do intraday. I get in and I get out before I go to bed. So that would be a good time frame to understand how short it is. All right, the second one would be stock would be a single direction, whereas we do dual direction. Now, typically, I go to any public place, in the lift, in whatever, people say, oh, today's market good, good. Means what? Means market goes up, all right? Oh, today's market very bad, means market goes down. When I hear this kind of talk, I know it's called investors talk. We do not talk like that. It does not mean that up means good, down means bad, because we can do both direction. If we feel that the trend is up bullish, we will typically buy first. If you are correct, the market goes up, we take profit. That is what we call going long. All right. If the market is weak and is coming off, what we do is the first action, we would sell first. And the market comes down at a cheaper price at a later time, we buy back. This is called going short. So for us, up or down, if you're correct, also good. If up or down, if you're wrong, then up or down, also bad. Yeah, so that would be the perspective as a trader. Now, the third point, usually for stocks, no leverage. Usually for futures trading, there is leverage, right? Whether you know or not is implied, yeah? Just how I briefly mentioned already, margin trading is a leverage. Now, stock basically, like for example, if you buy something that is worth $100,000, you put up $100,000, all right? So that is called no leverage, yeah? But for futures, if I were to trade a contract that is worth $100,000, I do not have to put up that full amount. I would typically put up a margin that is either $5,000 or $3,000. To get an exposure of 100,000, $3,000 or $5,000 would be either 20 times or 30 times leverage. So do you know the implication? All right. If you don't know, I will elaborate now. So you think about it. So basically, these are the three main differences separating what most people are and what I am. Now, for these three-part sessions, I intend to, after so many years of teaching, I would like to let my audience know a bit more, because it's important for you to know thyself. So I've got some more lines to draw the line between these two kind of behavior or thinking. The next one would be this kind of approach. When market against you, you typically hold, right? And then there is a term called dollar cost averaging. Yeah, wow, come down cheaper, buy some more. So therefore, you average out the price. I'm not saying that it's right or wrong, but it is a strategy itself, right? But this belongs to this. Now, for people like us, this is not a luxury. This is a disaster. We cannot afford to hold if we are wrong, because it's a margin leverage trading. We put up $3,000 to buy something that is $100,000. If this $100,000 go against us by 10%, right, your $3,000 not enough to lose. So therefore, you need to, when put on a trade, define where you're wrong, you're going to cut loss, right? No question asked. Once I go in and if the market go against me and reach my defined level, I would cut loss. Yeah, cut loss to us is a very common thing. It has been happening. It is still happening. All right, just that the amount we lose compared to the amount we make net, we make money. So that is how we make money. But to this group of people, like cutting loss is a very scary thing. Yeah. So this is a mindset shift that you need to take note. Now, next point. These people need forecasting. I can understand why they need forecasting, because it's long term. Long term meaning that you cannot have too many chances to make mistake, right? Wow, suddenly 10 years gone, suddenly 10 years gone. If you start at 60-year-old, how many 10 years do you have, right? So here is setup based. We do not forecast. We follow setups. You learn a setup. Setup means a predefined condition that when this condition met, you put on the trade. All right. So you trust probability. Yeah. So therefore, we follow a lot more setup based, whereby these people need a lot of forecasting. Relating to this point, because they need forecast and long term, they need to know. They want certainty. Now, to me, how to know? It's very difficult, right? All the fundamentals change and change and change, and especially you have the current US president, wow, they're so good at making you bonkers. I don't see how y'all can know. So people sometimes ask me, so Tom, what do you think he will do? Hey, I'm just a trader. I'm not an economist, politician, or whatever. If I know what he would do, so therefore, these kind of people, they need certainty, they want to know, right? Whereas these kind of people, fortunately, we do not need to know. One very important word, if there's nothing that you can remember after this session, I want you to remember only one thing. This big word called probability. I pause to make you internalize this word. It's a probability game. All right. Probability means even you have a 99% chance that this trade you think will make, there's still a 1% chance that it would go wrong. Every single trade has a random outcome. So probability means you need to collect statistics. You collect statistics to make the whole thing work for you. All right. So therefore, there are multiple opportunities, yeah, and setup based, and therefore we trust probability. So this is the difference. Now, the next point, diversification. I intend to include this because there's one day, I forgot under what context, people, my students, we were talking about Warren Buffett, and then they start to argue about this. So does Warren Buffett diversify? Yes or no? I can see some nod, some shake, right? My answer may not be correct, but as far as what I know, I don't think he diversified. Although he bought more than one thing, but when he read about a company and believes in it, right, he goes heavy in. He goes heavy in, yeah. Now, what is the problem of diversification? To some people, they say diversification is only for people who are not sure what you want to do. Imagine you have $100,000, all right? Now, for Warren Buffett, if you can find one company that $100,000 all in, and then if you make 100%, you make 100,000, right? But if you're not sure, then you go and buy 10,000 10,000 You choose 10 different things and buy 10,000, 10,000. One of them, wow, it's very good at 100%. You make only 10,000. The rest not moving. So basically, if you depends on if you belong to this group again, whether you're professional or whether you're amateur, right? You're very good. You know how to select stock. You do like Warren Buffett, whereby whatever he believes, he goes, and that is how he grows until he becomes the world #1 investor, right? So therefore, over here, now, do we diversify? It depends. You can, and you don't need to. For me, my background, because I was from the Nikkei pit, right? You saw that where Nick Listen was. So as a newbie, I traded in the Nikkei pit. I born a Nikkei trader. I die almost a Nikkei trader. Now, basically, in the floor, we have to be physically in a pit to trade. When we want to do another contract, we need to go into a different pit. So therefore, I don't diversify. I specialize. Yeah. Now, after the floor closed, for whatever reason, I started to help SGX do training for SimSki. So therefore, after that, for a long time, I specialized in SimSki. However, if you are good at setup, right? I know people who are very good at setup. So you look for contracts that have all this setup, then you can start to diversify. Yeah, that means you are not specialized in anything, but you're specialized in setups. Okay, so this will be the next difference. Now, I hope, I got one more point. Maximum loss. The maximum lose for investing is everything. Sounds scary or not? Of course, wow, lose everything are very scary, right? What's the maximum for this? You can lose more than everything. Yeah, because you do not use leverage. So whatever you put in, your stock, that company go bust. That means your stock is worth zero. You lose everything. That is the worst case scenario. But over here, leverage, right? You buy something that is worth $100,000, you put up only $3,000. And this $100,000 go to zero, you still owe $97,000. Yeah. So therefore, you can lose more than everything. I'm saying this not to scare anyone. So if you know what to do with all this above, right, you know that this will not happen to you. If this happened to you, that means you're not following the above properly. All right. So in a way, while trying to make you understand yourself, I'm in a way repeating some of the important key points on money management. Yeah. All right. So therefore, as I say, trading is like fighting a war. So one of Sun Tzu Bing Fa is called 知己知彼，百战百胜, know thyself, know thy enemy. And therefore, I'm not sure if this really comes from Warren Buffett. Long time ago, I saw this quote somewhere, and the word there is Warren Buffett, right? Anyway, I like this very much. If you do not know who you are, Wall Street is going to be a very expensive place to find out. So let me go back to this, and you decide again. And let me just double confirm my statistics. How many of you feel that you are more to the left side? Please, hands up. How many of you are more to the right side? Please, hands up. I'm correct, more than 50% belong to the left, right? So therefore, after discovering this, I find it important and necessary to make this definition. Now, so those of you who insist that you want to stick on to this side, no problem. Yeah, just entertain yourself tonight by listening to my presentation. But if you find that you're open-minded enough to maybe want to explore this, yeah, I hope today's session can open a door for you to explore something new. All right. Okay, so let's move on. For what the write-up is, we will explore how traders can interpret market behavior, right? How we interpret market behavior. So therefore, I am interpreting market behavior as a trader, not as an investor. Again, there's difference, yeah? Okay, so with this, I want to share one more difference. People over here, right, will focus a lot on fundamentals, economics, geopolitics, policies, yeah? Whereas over here, it's a numbers game. Whatever you read this, yeah, bully you lah, it should be like that lah, whatever, it doesn't matter. To me, all these are excuses for people to buy or to sell. So we look at the collective action of all the professionals after they see all these things, what they do in the market, and we follow all the above, yeah, and it's just a numbers game. All right, so this book helped me a lot when I was new. I'm fortunate enough to read this book, The Disciplined Trader by Mark Douglas. It has got many concepts that I love a lot, but one of the important points that impacted me is, he said, the market is a totally unstructured, random, and chaotic place. Do you agree? Doesn't matter if you don't agree, right? Now, so how can anyone possibly make money and achieve consistency in a market that is unstructured, random, and chaotic? The solution is you try to create structure, create order, right? So with structure and order, therefore, you are able to frame the market and define what is happening to the market. But more importantly, you create order and structure to define your own action. What to do, what not to do, when not to do, when to take profit, when to cut loss. So this structure and order are created for the more important second reason, to guide your own action. All right. So developing a strategy, obviously, I will use technical analysis, which means using charts. Yeah, using charts. Now, so defining the market structure, TA, DLP. The three components that are called DLP respectively stands for direction, level, price action. I won't go into definition now. I will talk about them one by one. And when I finish, you will know what I mean by direction, level, and price action. So let's start with level, right? When you see a blank chart, yeah, blank chart, nothing there. Now, when you put in levels, that is what it looks like. Those horizontal lines, static lines on the chart. What are the levels for? This is important. There are two purposes. If you can understand these two purposes, then your level will make sense. If you don't understand these two purposes, then wow, you have a lot of levels on your chart. You tell me, hey, I'm not making money, then, well, that's when you don't understand this. The first purpose is to make trading decision. These levels are very often place that we decide to participate, yeah, whether to get in long or get in short. And the second reason is the levels have properties like magnet. Physics lesson. I typically ask, what are the properties of magnet? Most of the people can immediately answer, oh, it attracts, right? Suddenly I see a student, I feel asking. The second, other than magnet, other than attract, magnet also has the property of repelling, right? Attract and repel. So basically, just to give you one example to illustrate, in a lot of public seminar that I do, in SGX whereby there are panel of speaker. Now, I'm typically the trader speaker. The others are analysts, investors, remisiers, right? Whereby audience would prefer. They will ask them, yeah, how do I know market go up or down or whatever. Typically, like end of it. So what do you think? Market go up or down? So they will bring out all their fundamentals, all their slides, all their research to say why you should buy. Now, to me, that is not important. To me is, where is the market at the current place, right? If I use a building, yeah, the market can be at 3rd floor, it can be at 20th floor. During this seminar, the speaker probably prepared his presentation 2 weeks ago. These same fundamentals, 2 weeks later, does it change? It doesn't really change, right? But 2 weeks ago, 2 weeks ago, market could be at 3rd floor. He gave you the same presentation that you should buy. 2 weeks later, he's giving you the same presentation that you should buy, but market is already at 20th floor. Is there any difference? If you don't know the difference, I'm not going to tell you. Right? This is a bit common sense. Yeah. Now, so in terms of money management, if something that I'm supposed to buy, hey, 3rd floor, there's still a lot of room to go, correct? 20th floor already. Of course, I'm not saying that it cannot go up anymore, but there's a difference. Your risk-reward ratio also, there will be a difference. Now, so therefore, this is when level come in. If you say, hey, can buy or not? I would want to know, or can go up where? Do I have a level there to serve as a magnet for the price to go, right? And how far away? If there's still runway, good. If only there, I buy already, my reward is so little, I got to risk so much. Yeah. So the different reasons of levels, these two purposes, to make trading decision and to understand that all these levels are magnet. All right. So there are many, many ways to talk about levels, but mindful that I have new people, people who have seen me the first time. I only have 1.5 hours. I cannot give you a very complete presentation. So anyway, I do want to give you something simple enough and yet comprehensive for you to take home, whether as an investor or a trader, that is useful to you. So basically, I've chosen on level what to share with you. Now, I will be using an index. Which index do I choose? The question is, do you know in 2025, which country's index is the strongest performer? Some would say like that. No, we are not even the top 3. Hong Kong, wrong. Korea, right? KOSPI. So I would use this as an example. The South Korea KOSPI. So I would use the beginning of 2025, all right? So what I want to show you about level is some of the SOP that whether investor or trader, you can also do. Step number 1 is on the 31st of December, when the market closed, I would use an orange line to draw that closing price. I call it YEC. It stands for year-end close. When you look at my chart, right, you see an orange line. There's only one orange line. The rest of the colors would mean other things. Yeah. So this orange line is a year-end close. Now, during the progress of the year, people would look at it, oh, is positive, is negative, positive, negative. And then until the next 31st December, they will all compute. Okay, so you're up how much, out how much, which country is the first, which is the second, and so on. All right. So the step 1 is to draw the YEC. Simple enough. All right, the second one is to draw an initial balance box. This one, I have a certain formula which I find that a bit complex to explain. So if you say how to draw this initial balance, I can give you a simple way, just a really simple way. The first 5 trading days of the year, first 5 trading days, take the high and the low and you draw a box. That would be the initial balance. Yeah, the initial balance, which means that whoever started trading the year, subsequently, if it can go above this box, then the buyers are stronger. If it goes below this box, then the sellers are stronger. We take the message from this box. Second step. Third step. At the end of January, when January is over, take the highest point of January, lowest point of January. I use a purple color. All right, I draw it. I call it the Capricorn range. Yeah, Capricorn range. Now, this one from when I was newer, I study all those. I read books and I study, and people use many different ways to do technical analysis. Some people say that, oh, the first day is important. Some people say the first week is important. Yeah. Some people say at the end of the first month is important. If it is up, that means the rest of the year will be up. Now, if you use in 1990, that point in time when I read all those books, when they take the historical data, statistically, there are some truth to it, not 100%, right? Statistical truth. But after that, I don't think it's very true. But there are some people who will still follow this. Yeah. Now, so later on, some people actually use this Capricorn range, and they look at a monthly close. Monthly close, meaning that the next monthly candle, February, does it close above this range or below this range, or does it still trap inside? All right. So this can be a simple SOP to follow. 3 steps. First one, YEC, initial balance box, and Capricorn range. Easy enough? All right. Okay. Yeah. So these are 3 steps. Yeah. So you can do this to anything. You go back, whether you like to look at gold, like to look at stock, Bitcoin, whatever. You do the same thing, and then you observe. So basically, if you watch this enough, right, do your back test, do your forward test, and look at a lot of things, yeah, these are the few scenarios that can happen. Once your YEC is up, and then your initial balance box is up, and then your Capricorn range is up, right, by which time the price should be within the Capricorn range, correct? On the last day of January, you draw that purple box, yeah? Now, after that, in a typical strong year, it would break the top side. In a typical strong year, it would run. And probably at the end of the year, well, up how many percent or whatever. Conversely, in a typical bearish year, it will break the bottom side, it will run. All right? It can happen like that, but not very common. The more common and more orderly way is, it will start to go above, come back, do a retest, supported, and then I run. This is an orderly way. Yeah. Now, there will be orderly behavior in the markets. There will be sometimes not orderly behavior. So, as I say, we follow setups. Orderly setups are what we like. These are the situations that you should be making money because it's orderly. So, if it is bearish, same thing. It goes to the bottom side, come back, test resisted, and then start to trade lower. Orderly. Yeah. Now, there will be years when there are no impetus, there are no reason, there is no whatever. So although it goes above, but it cannot run, it come back. Try to go above, cannot. Even go the other side, all right? And then cannot. So basically, it trade within the Capricorn range, force break above and below, and it is typically a sideways market for the year. Now, especially sometimes when this range can be very wide, yeah, in a non-trending year, then it can even do all this. Investors at the end of this year, yeah, they sigh until US can hear. But traders, very good opportunity. Buy low, sell high, buy low, sell high, buy low. It's not tunnel, you know. Yeah. So in fact, this is very, very easy to make money market because you have a clear support, clear resistance. All right. So these are the typical ways of how the market can behave. Okay, so far. We go back to take a look at Kospi. All right. So at the end of 2024, 31st December, draw your YEC, right? Now, after that, not using the formula, which is to say, if you do not know, then you take the first 5 days. But I use my formula. I define the initial balance, which is this gray box. All right. When it's completed already, January over. The highest point, the lowest point, I draw my pair of purple line. The Capricorn range is up. Yeah. Now, after that, can you see what happened after January in 2024? The Kospi attempted to go up, right? All these things during the month, well, you can trade if you know what to do, if you are set up. But otherwise, the important thing to watch is at the end of the month. We want to see whether the February month, can it close outside the range? All right. Where did it close? It come back and close inside. It did not tell you that, oh, I'm strong. March, it started to go above again, right? At the end of March, it closed inside again. It is not giving you a message that, hey, I am strong, all right? Do you know what happened in April 2025? April 2025, do you know what happened? If you do not know, you are not an investor, you are not a trader, okay? You may think you are. Now, these are some of the big events that go down in history. I call it the Trump tariff. Yeah, he shocked the whole world by, wow, I mean, you all know lah, huh? So basically that caused the Kospi to dip below the range, correct? That is in April, yeah, April, huh? But what is important is at the end of the month, what happened? The fella closed above the Capricorn range. So as you see, 70% of you belong to the left side, right? Look at fundamentals, interpret news, try to project policy. But traders, we take the message from the market. The monthly chart tell us I close above, I am strong. Subsequently, this thing go all the way. And then at the end of the year, it is up 75%. Kospi clock in 75% return in the year 2025. The biggest gain in the whole world. All right. Now, 30th December, follow SOP again. First step, YEC. All right. Second step, I draw my initial balance. Yeah. Using my formula, I use a different color. I alternate between gray and blue for different years. So this is the initial balance. And then when January is over, purple color, Capricorn range. Right. So when this is done, look at what happened in February. At the end of, this is just to remind you the 3 steps. At the end of February, it closed up there. So you say, wow, Tom, I listened to you already. I will follow SOP. So strong, right? Buy. Let me remind you, I told you already, in the building, 3rd floor and 20th floor, any difference or not? Now, don't kanchong first. So teach me that, no use. When I finish all the DLP, then you see whether got use or not. All right. Now, so this is what happened. Yes, this fella moved up 75% in the year 2025. In the year 2026, the first 2 months, this is up 45%. I'm talking about percentage, 75%, 45%. After this session, you go back and do your own simple calculation. Use absolute value. Yeah, the absolute value of a 75% gain and the absolute value of a 45% gain is the same absolute value. So in 2 months, this fella can run same as this. After so much, traders like me will not chase anymore. All right. So therefore, of course, you have something in nature to help. The weekend, 28th April, right, into 1st of March. Wow, your good friend in America in action again. So this fella come down, yeah. Now, so people look at news, read the news. Wow, close, blockade, wow, bomb, die, whatever. We look at chart. Is it very weak? It come down and it's still fighting at the Capricorn high. It's just fighting here, right? Pam, try to go back. The whole of March, despite all those things, drag on until they call it war fatigue already. End of March, okay, this fella closed that inside, right? Inside only, And then April, I have not updated. I prepared this over weekend. So Monday, Tuesday, not updated. Today, Kospi took up this high. Today, all right? So therefore, this is what happened. Now, but what's important is end of April, correct? We still have another slightly more than 1 week, by the end of next Thursday, nothing's impossible, but I can't imagine a situation whereby next Thursday, things are so bad that this fella plunge back close inside. I'm making a judgment call. I'm not saying, I'm not guessing how high this will go, but very likely for the strength it is, it can close back above the Capricorn range again by the end of next month. What is your take? Guess is free, no? Yeah, you can talk whatever you want. As long as you don't bet, you won't lose money. Win already. See, I told you so. Lose already, diam. All right. Okay. Now, so this is Kospi. Repeat again. Can you understand? The levels are there for me to make trading decision, and they are magnets. This is a strong market. When you look at the weak market, whereby they close below this, do you know where they go? They plunge towards last year's range, right? Go back and look at some of the market that you choose, you will see what I mean. and you will start to observe the purpose of SR level. Okay, so far for this one? All right, so that is the first one. Next, we move on to this. If you want to go back and do some homework, as I say, my session 1.5 hours cannot be very complete. So I will give you some homework if you wish to go back and you can look for pivots, right? That is a very good topic to learn about levels, and of course you can learn about Fibonacci. Yeah, this is even more difficult. Most probably you need people to guide lah. Without guidance, right? Be careful lah. Because I have a nickname for Fibonacci. I call Yi Tian Jian. You know Yi Tian Jian. It's damn powerful one. Yeah. Wow. You see my sniper trader take the Yi Tian Jian. Wow, straight away all the enemies down. Right. Then the student take a 2 fingers on the floor. Okay, so I'm talking about Fibonacci as a whole. Yeah, there are many types. Everything also got many types. Pivots also got many types. But these are the things that you can explore. All right. Okay, so the next one we talk about will be direction. Again, among all the different ways to establish direction, I've chosen something simple enough called moving average. Yeah. Now, I'm sure this is not something new. This is almost like when you learn Kung Fu. The modern kind of people will say that, oh, no, we teach you the latest kind of trending Kung Fu. The old one, no use. But if I ask you, Shaolin, learn how to breathe, learn how to samapu, useful or not? The younger people say no use, yeah, but the older people still useful. Moving average belong to that kind of very traditional Kung Fu whereby it is still very useful. All right, what is a moving average? I'm not talking about the technical definition, the concept of what it is. It represents a fair value. Fair value. Now, let me again share with you the left side and the right side. You know your left side and right side, right? The investors on the left side, the traders on the right side. So, left side, they always talk about cheap, expensive. Cheap, they want to buy, too expensive already. Think twice. Now, what does fair value mean? Let me give you an example. If I were to ask you, please respond to me by shouting out the answer. What is the fair value for a plate of char kway teow today? $5. Any other answer? I'll take 3 answers. 10. Wow, you go hotel. Okay, thank you. 5, 10. Any more? I want $4. Okay, so we just take 5 5 as the average, right? Now, so if you remember 5, you go somewhere 4, you go somewhere 3. What you feel? Cheap, correct? Yeah. But you go to where Our Lady go, $10. So expensive. It's because you are referencing to a figure. Yeah. Now, when you reference to this, above is quite expensive, you will hold back to buy or not. Below, you will tend to easier for you to take action. The same thing goes for stock. If you remember a share price, for a long time, suddenly it is below the tendency that cheap luckily didn't buy earlier, now you buy, correct? So expensive, did not buy earlier. Now, this mindset of the left, as a trader, is a numbers game, is a direction game. When we have a moving average, it is to tell us where the fair value is, and where the price is very telling. If it is above the fair value, defined by the left group as expensive. Why can it be expensive? Because the big boys, the institution, are willing to pay premium. They are willing to pay premium. And when the institution are willing to pay premium, this trend is supported and is likely to go higher. When it is below the fair value, it is cheap. You want to buy. The big boss will say, you want, come, I sell to you. The fellow say, some more, no, I have some more to sell to you. Oh my, now I buy enough already. Then it goes cheaper and cheaper and cheaper. So as a trader, we look at cheap and expensive in a different way, right? With reference to a moving average concept is to tell us the trend. So is this concept okay? Now, so therefore, I'm going to give you a few important concepts for you to take home. Number 1, use only when the market is in an orderly trend mode. Moving average, don't anyhow all the time you see one. The market will toggle between two modes. It will trend, it will rest, it will trend, it will rest. It will toggle between these two. When the market is resting, right, then the moving average is not very useful because it will come out to where the resting area are, right? But when it is trending orderly, keyword, then it is useful. It offers a level for you to get in. Yeah. Now, of course, the next thing is be very mindful whether it's doing premium or discount. This is to give us the bias to be bullish or to be bearish in a totally objective manner. Not you interpret the news already, you feel that it should be go up, it should be go down. You don't interpret, but you take it from the market. The third point, enter as close as possible to the MA levels, right? As close as possible. When the price is too far away, then it's too late to change already. This is a standard rule, a standard rule. Now, the next one, this is capital letter. Understand the concept of mean reversion. When I was in university, I studied maths. I studied statistics. I come across mean reversion before. Yeah, but when I study that time, I don't like stats. I gave up that whole topic. Very, very garang. I remember when I was doing university maths, I have three topics. I don't like this. I throw away this topic itself. And just based on the other two, I can score an A. Okay, never mind. Now, when my daughter goes to A level, I teach her maths, throughout her entire growing up journey. When it comes to A level, I saw the topic statistic, die lah. Give up the whole thing leh. But 很伟大的爸爸. Just because of her, right? I pick up the whole damn thing. I study from scratch statistics just to teach her. All right. And then I come across mean reversion. And I start to go deeper research on, hey, this is a very interesting topic. Beyond just trading and maths, it applies to a lot of things in life. Go back, if you have time, you can Google yourself, mean reversion. Now, moving average, if you want to understand the totality of this indicator itself, you ought to understand mean reversion. Now, let me give you a very simple example to explain. I was explaining this to my students, but as a teacher, always got to think of different ways to explain so that they understand. Until this thing happened only, I think about maybe 3 years ago, I suddenly thought of this. Take the price like an iRobot. Those of you who have iRobot at home, right? Intelligent one. The moving average is a charging cable. Your iRobot was go and clean the north, go and clean the south, right? After cleaning already, the iRobot intelligent, we realize that, hey, my battery is low already. Low already, what must you do? You must go and charge, right? Go and charge, right? So if it doesn't touch this for a long time, that means it is running, and the battery is low, and you will have to go and charge. You have to touch the moving average. It will either run back to the charging cable to charge, or it still have a bit of tian, then it won't run back, but it will stay there for the charging cable to catch up. That is how the moving average behavior in terms of mean reversion. All right. So now, if you understand that, let's look at the same Kospi, whereby we look at the levels. Now we look at the moving average. Sorry, I don't have time to clean up too much things on my chart. So you focus on the pair of blue lines, the purple and the blue, as the M8 I'm talking about. Can you see that before 2025, in 2024 over here, is the Kospi doing premium or discount? Discount. If you ask me why, I'll say you go back and rewatch the video. All right, it's doing discount. Discount, go back to charge, resisted, go back, resisted, go back, resisted, go back, resisted, go back, resisted. But YEC, 31st December. It is a bearish market for a good 4 months, right? 4 to 5 months. So end of the year, done already. YEC out. My initial balance box out. My Capricorn out. Now, what happened in 2025? Can you see that the iRobot go above the charging cable? It is doing premium now. All right? But go higher. It is suggesting a change of trend. The market is giving out that information. All right? So what happened? Come down to test. It is testing this support, this level for support. Also, the MAs are supported. All right? It tried to go up. Remember, we still have our end of month. End of month, it come back here. It did not close above the Capricorn. It come back here to end March. It comes back inside and it goes below the pair of MA. Now, I like a phrase very much. This phrase, I can't remember who said it. Alexander Elder. In his book, when he talked about TA, he says, the big boys can hide from you what they know, but they can never hide from you what they do. I repeat, they can hide from you what they know, but they can never hide from you what they do. All right? What they do is here. Things have gone discount. All right? So that was when Trump announced the tariff. Yeah? Wow! I can imagine the left side start to look about economy, start to look about his policies, start to look about the implication. But by the end of April, the market go back above the fair value, close above the Capricorn range. Now I put two things together. Does it give you a 2 stars align? This thing go up. Now we look at this here. All right. Look at how when it moves up, it has to come down. But this is the charging time. Charge already, got 电 already. Now I can go. I run so much already. Okay, I need to charge. Charge enough already, got 电 already. You look at this amount. Your iRobot charge already. Now go clean under there. And then you say, wow, very bullish. Very close above. Got any more battery left or not? So suddenly, again, US and Israel reminded the iRobot, go and charge your bloody battery. Point. And it is basically supported, right? Supported. End of March, it goes inside. It's below, yeah? Then you tell me, Tom, you see, below already what? How come like that? Later, I give you my third point, then we see how come like that, okay? All right. I finished my second point. Is this okay enough? Direction. Now, if you want to learn some more from moving average, you can go and find out envelopes, you can find out channel, you can find out MACD. All these are things that spin on top of your foundation understanding of moving average. We go to the third component, price action. Price action. This can be as easy as it can be. It can be difficult. It can be impossible. What I mean by impossible, in our trading community, those who have heard me before, I always talk about we have a super world-class sniper trader. Her price action, in Chinese called 炉火纯青. She's so good until at times she say the next candle will be surely up or surely down. Or she look at the price action and say that market didn't tell me it's going down. Yeah, you want to wait down there, forget it. It was sure to go up. Now, you ask her, how do you know? Well, can't explain that. You can't see that. You can't see me. I cannot see that. So price action is a very important topic. It can range from very easy to very difficult. So same thing. I can't tell you the very difficult one because I also don't know. All right. So I tell you something that is easy enough that if your IQ is average, you can take home and you can use. I promise you that. You come and say, Tom, I cannot use that. I have a condition and your IQ is average enough. All right. Now, just now, we have a condition, too late to buy, too late to sell, right? I'm going to talk about one kind of price action that can help you identify reversal point. If you have this knowledge, do you think it's worth a lot of money? If you cannot understand why it's worth a lot of money, I also leave it to you. All right. Now, price action. I want to talk about price action creating gaps. Gaps itself can be a big topic. Can you spot the gaps in this movement? All right. It depends on your experience. Some people will say that, oh, there's a gap here. Because they compare the previous high and the current low, there's a difference between the high and low. There is a gap. This is what I call high-low gap. All right. This is what most people, for the books that I read in the past, they use high-low gap. But we do not use. For my sniper trader, I learned how to use body gap. which means that if you have two candles body separated with a gap, that is when we have a gap. Okay, so far? All right. So it's not the high and low, but the body. Now, so these are the gaps that you have, right, between two consecutive candle body. So typically, in an up market, you will see gaps, going high, gap higher to open and then leaving a body gap behind. These are bullish gap, and typically in a bearish market, you have bearish gaps, right? Okay, so I'm going to zoom into just teaching you something very simple, as I mentioned, to identify reversal. When the market runs to a certain high level, 20th floor, 30th floor, 40th floor, run away from the charging cable, all right? Can you identify a bearish gap? Can you identify a current candle and the next candle body is lower? So you have a bearish gap. Can you? Did you see this? I'll remove again. This is the body, and this is the next candle body. There is a bearish gap. All right. A bearish gap can be equivalent to a sell signal, especially if this gap using as a level is being tested as a resistance. Then the message is even more powerful. Now, this is a case whereby the market drop. Can you identify a bullish gap? I'll give you a few seconds. Did you see this one? If you do, hands up for me. Half of you. The rest either don't see or hands too heavy. All right. So this is a bearish gap. This is a bullish gap. Now, let me just show you some case study example. Remember COVID? It's called COVID-19 because the virus is discovered in December 2019. And the whole thing full-blown 2020, January, February, March. All right, things got worse. People start to die, lockdown, and no future. Very bleak, yeah? What happened to the market? Dow Jones, S&P, NASDAQ, on the 23rd of March, it reached a low, and the next day, all the three shows a bullish gap. The next day, they have another bullish gap that's being tested as a support, and there it goes. Again, I've been teaching for so many years. I do courses, and students belong to the left side come to my course to learn trading, but yet they will ask questions belong to the left side, right? Oh, but a lot of companies die, whatever. Don't talk to me about fundamentals. I hurt my ears. Right? We look at chart, we follow setups. You look at what happened to the NASDAQ. At this very high level, there is a bearish gap. Whatever the fundamental, I don't care. With or without COVID, it is a sell signal, right? With the COVID, this seller plunge all the way. We have a bullish gap. With a second bullish gap get supported, and the whole thing run up with a bullish gap. Now we can see that it go discount to the pair of blue purple line. It goes above, and it did not touch this level. It runs and then after so far, when you think that, hey, suppose there's no battery already, this fella want to do a final charge. Then you say you forgot you have no battery already. The fella, oh yeah, pop bearish gap. And then how? I really need to charge. Mean reverse back to fair value. All right. After COVID 2020, forward, when is the next crisis? It's called the Trump tariff. 2024 April. Now, this is STI. STI. This is NASDAQ. All right, this is STI. This whole up move, these are bearish gap, right? Bearish gap, rest a bit. Now, at this highest level, same thing. There is a bearish gap, and it started to come lower. Yeah? People can hide from you what they know, but they can't hide from you what they do. It closed here on a Friday. Over the weekend, or rather at night, the tariff is being announced, and STI gap down 7%. All right? Everybody is trying to figure out what the hell is going to happen, and you continue to look at fundamentals. Yeah, we have one bullish gap. The next day it gap down again. We have a second bullish gap, and it goes for a V-shaped recovery. Go back and do your own homework, plan in your own chart, watch this, and take note of this few crisis moment. Of course, we are still in this moment. You tell me how oil price the war is going to end or not? Is it going to end? Market take all-time high leh. Some people say bully you. Bully you as a trader in technical analysis is a vulgar word. Something go up means go up, go down means go down. No such thing as bully you. Dow Jones, S&P, Nasdaq. Without showing you the moving average, I just show you how these three markets this year, they are showing weakness compared to Taiwan, compared to Kospi, compared to Nikkei, started the year February, close above Capricorn level. Our US brother did not go above. They are trapped within the Capricorn range, and they drift down to test the bottom side. Got insider information or not? Got insider or not? If you tell me no insider, you still didn't read news. But you tell me not to read news, not fundamentals. Read news about Donald Trump's family. Right? Now, the market went below, and all this taco, we're going to bomb them, we're going to destroy whole civilization, we're going to change their mind. How they block? I cannot unblock. I block it, so later I unblock, that's it, unblock. Now, so therefore, look at what happened towards the end of March, after one whole month of, what do you call it, war fatigue. All right, 30th or 31st, Dow Jones, S&P and Nasdaq did not show a gap here. There's no gap because it's overlapping, but we have Dow Jones giving us one here. All right, and the next day another gap that is tested and supported. I didn't teach a lot of things. I teach these three things. Simple enough. Okay, some of you say, hey, you see, but there's a gap here also there. All right, of course there will be if there is one so clear signal, buy means go up, sell means go down. I charge $1 million for my course already. And then there's no poor people in this world. Now, but you put in a lot of other things, then you can start to trust this. Because as I mentioned, the war affected Western market the most. It did not affect, I'm not talking about economy, that one I don't know, right? Men on the street, you tell me, wow, Thailand, no aircon, whatever. Men on the street, I do not know. But the stock market, the stock market will always lead recovery whenever there's bad news. Always. It's never the economy become better, then your stock will go up. Amidst all the bad things, from historical, from 87 crash to dot-com bubble to whatever, is always like that. So therefore, when this thing happen, you look at some other markets which I follow. Can you see that these are the markets that did not even drop? They start to go up. This Thailand, by the way. This Taiwan, by the way. On that last day of March to the beginning of April, the rest of the market, all the gaps appear. Buy signals across the board, it all appeared. All right. Now, I'm not forecasting anything. I'm teaching you something whereby you can go back and you know how to use it yourself. The only interesting question is, when you see it, do you believe it? All right. So price action. What else do you want to learn on your own? Go back. Candlesticks. All right. Patterns. All these are under price action. Yeah. Now, tonight I've given you simple enough 3 points. Creating structure. This is a Sun Tzu Bingfa quote. Strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. When I come across this quote and I show my community student, that time I remember there are 3 of them older than me. They're Chinese. Tom, what is this in Chinese? Well, then they go and search and they told me, oh, this is called 战略. This is called 策略. Okay, if that helps you better. Now, if I translate this into trading, I come across this quote. whoever this fellow is, traders need two tools. One to define the trend, one to decide the trade. Do you understand? Right? To decide the trade is what I say just now, setup. What is the setup condition for you to say, okay, I need to enter, where I want to take profit, where I need to cut loss? Those are setups, because there's so many different setup, and you need some foundation understanding before we can really talk about setup, because setup is typically intraday and intraday time frame. You notice just now I show you all a daily chart. I use daily chart to establish the first tool to define the trend, to give me that big picture, to give me that strategy, which is called 战略. All right. So whether as a trader or investor, whether you belong to the left side or right side, this 战略, I feel is very important. Yeah. As I say again, I only have 1.5 hours. Tonight, I did not really go into setup per se. Yeah. Again, some homework for you to go back and find out more. So with that, I would go to the same case study that I talked about, this one. Now, all these are within our community itself. We have regular session, we have physical classroom. Until the COVID lockdown, we go into online. So this is my sniper. I mentioned that the world-class female trader, she's able to train students who are able to see a setup, put on a trade, and make their 2 exits. First exit reach the same night, $250,000. Second exit haven't reached yet. The second day, it came down and do a similar setup, enter again. First exit, another $250,000. The balance 2 exit reach here. You add together, this is about $700,000 in 2 days. All right. Tom, this is high side. This is paper trade. This is what we call proof of trade. Our sniper requires her student to post a screenshot of your trader's account. If it's a simulation account, it will start with SIM. If this is a name, that means this is 真金白银, real money inside. This is always as a practice. Students would share their trade with the rest of the community. Yeah. Now, until, or rather, this is another phrase that my sniper always say: trading is all about size. You have to make a lot of money. It's not to trade a lot. Until when you're confident, when you're competent, you see a very good setup with high probability, you trade size. So this one that I show you making this amount of money is because he went in 100 lots. 100 lots, right? Now, I didn't know that until the last session, because I have a student who attended my session and told me, wow, I can't do this. Enough. Oh, okay. That's when I know that there's a misunderstanding. This doesn't mean that he's doing enough. It's just that the broker break down your trades to show you how it is being matched. All right. It's 1 entry, 100 lots, 2 exit, 50-50 accordingly. Now, recently, we have another one. This last year, August. Last year, August, there's a move down and a move up. We have another student, another high performer. He did a very good move. I'll show you the profit later. And he did a sharing session with our community. All right. Basically, you all learn the same thing from the teacher. You all see the same thing. Why didn't you all do it? So he ran through this with the class. And for the first time, I thought this very motivating. I'm very motivated myself. Honestly, I can't perform like that. So I just want to show this in the public seminar, because every now and then I do have people ask me, Tom, how much can the traders make? Well, it can be 3,000 a month, 5,000 a month, 20,000 a month. It can be sky is the limit. It depends on how good you are, how disciplined you are, right? There's no fixed answer. Now, so this is to give you an example of how much you can possibly make. But last session, right, before this, the topic on risk management, I asked the class, how many of you are willing to risk $100 to exchange for this? Well, I have more than half the class hands up. But I go to the second question, how many of you are willing to risk $1,000? If you lose, it's 1,000. Right? So many hands put down already. Left with only 3 hands. If you're not willing to risk $1,000, then you say, how much can I make? I would say none of your business. Because this student put on this trade, the risk, if wrong, is $1,000 on 1 lot. He did 50 lots. So if it is wrong, $50,000. Wow, that's 1 year's salary. for some people, right? Okay, so today I'm going to talk about this again from the method point of view. Now, last round I talked about this, including margin and everything else. I will not talk about that, but about this using technical analysis. Okay, this is an hourly chart. There are some setups which are our sniper setup, which I did not cover with you guys. But what I share with you, there are some things that is still relevant here, which you can understand. Right? This is the move on the Trump tariff. Yeah. Now you look at this yellow band as the fair value, the yellow band. How the Trump tariff got resisted, and it goes above, right? And it ran again without charging. I need to charge. After charging already, this fella run for so long, without charging, right? It did run for so long without charging, and then suddenly the fella still want to give you one straight up. Did the fella forget something? This is a setup. Understand? Now to understand already. When the market, when the price, when the iRobot did not touch the charging cable for a long time, you know this fella got no more battery already. Instead of going back to charge, this fella go and run some more. Is that a setup? Yes. Understand, ma? Right? Time to identify end of move. So this is when candles reading. Understanding that candles getting weaker, we got a sell signal. Reaching levels. We have Fibonacci levels. We have envelope. All stars aligned. 50 lots risking $1,000 on one lot. He made this whole move. All right, this whole move down. Of course, there are different places he took profit because of reasons which I will not elaborate today. Proof of trade. Again, it's not like in our. So he got in 50 lots. He got out in 3 badges. Total profit for this down move about $250,000, $500,000, 584. Right now, when he's out of this, yeah, he actually aimed for this line. But this whole movement, because of candlesticks reading, is to tell him that it won't reach already. He got out his final 5 lots. He turned long over here. Another 50 lots. The signal now is bigger. So the risk for one lot is $2,000. 2,000 times 50 lots, 100K. But here people say, oh, but here you make already leh. For our traders, you make already or you don't make, all these are history. You live in the now. What you do now, you're supposed to do, you're not supposed to do, should have nothing to do with what just happened. All right? Another 50 lots. This one took a longer time to go up. Yeah. He did some other things in between. At the end of this, the profit is $750,000. Proof of trade. Total for this down and up, 1.34 million. So I hope I answered that question. Whoever wants to know how much can a trader make if you're that good lah. All right. And this is a student. This is not the sniper teacher. Okay. So with this is only this portion. Can you see what I mean? A trader versus investor. Investor, you buy so many different things, $10,000 each. You're hoping to catch this kind of move. You do not need. You only need to identify setup, high probability trade. You are competent enough. It's all about size. All right, I've done this. I've done this today. Basically, quick summary. Know thyself. You understand this already, right? The defining market structure, technical analysis, 3 components, DLP. I start by talking about levels. Yeah, the 2 purposes is to make trading decision and their magnets. And then I give you an example of following these 3 steps SOP to start the year. Whether as an investor or trader, this is still very useful to help you make trading decision. And I use Kospi as an example. Yeah. Okay, then the second component, moving average, is a fair value, what it means by premium and discount. And then the concept, right? I will repeat them. And then we blend this together with the level. You can see how we have 2 stars aligned. All right. Third one, I use gap. And I zoom into using gap to help you capture reversal. So body gaps, bullish gap, bearish gap, how to catch reversal. And you can see that at the top, it gives you a sell signal. At the bottom, it gives you a buy signal. While all the news are very bad, you get a buy signal. It depends on whether you are experienced enough as a trader to trust the chart or to trust your news. COVID, Trump tariff, Middle East crisis, confirmation with multiple markets. Yeah, this happened again and again and again. It happens in the past. It is happening now. Will it happen in the future? If you think yes, then yes lah. If you think no, then it's no lah. All right, traders need 2 tools. I spend a lot of time talking about the first one. I leave it to you to do more on setups and case study. Do you deserve to make that kind of money? Are you prepared to risk? All right. The same thing. Do you practice until you're not fearful anymore? Do you practice until your body reflexes faster than your emotion? I've covered most of what I promised to cover. I'm done with this. Okay. Now, allow me to spend a bit of time on follow-up. Just like SGX and the house and whatever. Hey, Tom, your session, very good. After that feedback, very good. But nobody trades. I already said, because 70% belong to the left side. And also sometimes, you know, after a seminar, it doesn't mean that you go back, go in already, one big loss only, back to square one. So what are the follow-ups I have? I have 2 kind of follow-ups, one free and one paid. I have this trading wisdom that I created because of Philip Nova last year. I started to, okay, you can scan this. Some people can scan, some people scan, really cannot. Anyway, you try. Now, you can join this Facebook. It's open to public. It's free. After last year, I started to post my weekly homework following another step 1, 2, 3 procedure. Yeah, this homework is actually to look at 10 markets consistently and to see which are the strong ones, which are the weak ones. It's almost like you look at to do stocks. When I was new, I learned stock. They say look at the index first to see the general trend. Then look at the sector, which are the strong, which are the weak ones. Then go to the strong one and select your stocks, right? So this top down. So I'm doing the same thing. I look at all the indices and identify the general trend. The interesting thing is that it doesn't mean that all is up, all is down. You can see where the money is flowing in, where it is flowing up. So it depends on what market you are trading. Follow the trend of the market that you are trading. All right. Now, so I've been sharing this every week. I do have some personal friends who join, and they say that it's a bit, if you're not used to the SOP, you might find it difficult to understand. So therefore, what I did was I intend to do a free Zoom session coming Sunday. If you are free, you can join. That means after you go into this Facebook, you can immediately see this post, right? If you find that you want to join this Sunday, no need to register, just click a like on this post, yeah, so that I can have some expectation as to whether I have some people or there will be 0 people. Now, so on this Sunday, 10 minutes before 12 o'clock, I would be in the comment posting the Zoom link. So you can just click on the Zoom link, 12 o'clock, we would start. It will be exactly 1 hour, no more, no less. Online people, those who are overseas, you can also join. All right, free. For this session, free. I would be going through the 3 steps of how I do my weekly homework, explain to you the logic of what I see. After that, you can watch my subsequent weekly posts, yeah, to help you if you're keen, if you want to trade. All right. Okay. This will be the paid one. Not too long ago, now we used to have courses. I don't do private course. I only do for SGX. When they change, I also got affected. My courses are all there, but they stopped the course, and it's being put up for IBF funding again, and it's not approved yet. So if you say, Tom, I want to attend your course, don't have yet. Huh? If you wish to, you send me an email when the course is available that inform you. Now, otherwise, the course itself, after that, it is also important to have follow-up. So we have follow-up like tuition. Some people ask, how much is it? Now, let me just share with you what one of our regular students answered this question on behalf of the other people. She said, by the way, do you have children when you send for tuition class? How much do you pay per month to send your kid to a tuition? 200, 300, 500. When my daughter is in A-level, my wife signed her up for 3 tuitions by school teacher. Each teacher $1,000 a month. All right. Now, if you were to pay $300 to send your kid for tuition, hoping for a better future, would you do this for yourself? $300 tuition for a month to have a better future for yourself? Because nowadays we cannot rely on our kid to yang lao. Now, so our tuition is $300 a month. This, of course, you won't learn this kind of thing, but simple enough. 4 sessions by the sniper, 4 sessions by me. Both of us will run this together. Lunchtime, 12 to 1 o'clock, right? Whether you're working or whatever, lunchtime, 8 times a month. If you are not free to attend any of this, all these are recorded for you to catch up towards the end. If you wish to come for 1 month, you pay for 1 month. You wish to continue, then you pay as per tuition. All right. So what we do is people ask all sorts of questions. Show me what happened to silver, to gold. These are the Fibonacci drawn by my sniper. We extend for this one, right? Because if you don't attend our course, we also allow you to come to this, which means that we have to be prepared for some question that drag everyone to Timbuktu. Yeah? So we have to bring you down. We align a language. But more than just this, some people want to know about stocks, about Forex, about whatever. We talk about anything. We sell you that 1 hour of our experience. All right. Okay, this is what happened to this up move over the last 2 weeks. Our snipers gap, explaining the opportunity. This is Simsky. This setup gives you a profit of $325 on 1 lot. One good setup, you already make back your entire month's tuition fee. Taiwan is more volatile. That setup gives you $970 USD 1 lot. All right. Depending on how competent you are, how reflex you are, multiple lot size, you times accordingly. But of course, there can be losses. Okay. All right. So if you're keen, you can email us. Or if you want to find out about our courses, when it's available, you can also email us so that we let you know. Some people can scan, some people cannot scan. Anyway, you take a picture of this, go back and scan slowly, or you email us to inquire or to register for the course itself. The May schedule is not exactly out yet, but when it's out, we will inform you all. Okay, in the other one. All right, let me come to the last part of this. When I was new there, what do the seniors teach us? Yeah, they give all the different encouragement and advice, which I summarize into 2 very important golden rules. Yeah, number 1 is identify and follow the trend. All right, which it all makes sense because it's a numbers game. You must know whether the trend is up or down to gain the advantage. Yeah, but of course, when run too far, you still haven't participate, then too late already. Golden rule number 2, this is 5-star, which means the most important is wrong cut. If you violate this rule, I assure you, you encounter a situation when you wish you were never born. This can never be overemphasized, how important this is. All right. If you do not respect cutting loss, then you are an undeserving warrior in the financial market. Yeah. All right. So the last 2 slides, which I used in session 1, is still applicable. Trading is not about avoiding losses. It's about controlling the size, controlling the frequency, controlling the emotional impact of losses. Professional traders think in probabilities. I'm repeating this. Please hammer this home into your DNA if you want to be more active trading. It's a probability game, right? Not predictions. The next slide. Every trade is a controlled risk-taking exercise. Your job is not to win big, but to lose small and survive long enough for your edge to work. Yeah, until you practice, until you have the edge, you have the muscle memory, you trust the whole process. That is when you start to see profit. That is when you start to enjoy your retirement. You can retire as young as 30, 40, 50. Yeah. All right. So I'm done with today's session, including online students. I hope there's important things for you to take home. The next topic on psychology. We'll talk about this on the 2nd of June. Yeah. I do not know whether they'll make me do hybrid again. If it is, it will be the same setup again. All right. And with that, I thank you.
Thank you, Mr. Tom, and thank you, everyone. Right now, I think we probably have some questions for Mr. Tom, right? So we can have 5 to 10 minutes of your time. You can have you can ask Mr. Tom some questions. Online people also, if you have any questions, do feel free to type in the chat group, in the chat, and we will answer. So anyone has any questions you'd like to ask Mr. Tom? Yes, sir.
At the beginning of session, you mentioned there's the Capricorn range, one set of range. There's also the daily balance box, which is another set of range. Can you clarify again what is the use of the balance box range again? Because I understand that both range, both set of ranges are used to find out where the breakouts are, right? So
the initial balance is a concept that you not only use for the year, but for intraday trading, right? Many people use it for the day. Typically, the parameter can differ. Some people use 5 minutes, some people use 15, some use 30 minutes. Yeah, that I use 5 minutes. That means once the market starts, right, within the first 5 minutes, that would be we have a name for it. We call it COP 5. That means the opening first 5 minutes range would define for us where the subsequent breakout could be. If you see a candlestick, a daily candlestick, at the end of the day, you see a long bar, right? Basically, it starts from the opening and we start to break above, and then it will end up there. So of course, on very trendy days, this is very useful. But non-trendy days, you see breakout, you buy already. You see profit, it disappears. Yeah. So if you understand candlestick, sometimes it ends with a doji, right? Meaning that from the opening, it go up, it come back. It go the other side, it come back. So therefore, this opening range is very, very beneficial and useful for trending days. It is a setup for trending days. So just like if you remember, I actually show you the various permutations of how the year can happen, right? It can be a trending year or it can be a sideways. It's the same concept.
So basically, if different traders trade at different time frames, you don't really need both types of boxes.
You can choose to have only one set. I have people who they define their own year, 10 sets or whatever. It's up to you what you want.
Okay.
Yeah.
Anyone? Any more questions to ask?
Why is it called Capricorn?
January.
January. January.
On the first day and the first week, the English term they call the Capricorn effect. The Chinese they call Kai Wen Hong. It refers to the same thing, right? So especially in the past, whereby people are rather pantan, superstitious, they would like a good start to be auspicious for the year. So everybody they hold back, try not to sell, and in fact, try to support a bit to give you a good auspicious start. But nowadays, people don't behave like that anymore. So it can do anything.
Online, I think no questions yet.
Yeah, online, no question. Basically, when the online is over, I can stay behind for more questions for you people. Yeah, to make a difference between this hybrid. Then I stay at home better.
Okay, I think if there's no further question online, and so what I would just end off is just a few things. Like just now what we mentioned is if you trade the futures with us, right? Oh, you need to see me online. Okay. So if let's say you want to trade, you're interested in trading futures, we have the best rate, okay, in town, just like I mentioned. And if you're already our customer, and if you're not sure whether are you on the special rate, because the special rate you need to opt in one. Okay, because SGX needs to know who is under the rate. So if let's say you are not sure whether are you in the special rate, you can look for us, okay, or my colleague over there to check for you. And if you're interested to open an account and start trading, right, you can also look for us. Okay. And I think with that, that's all from me. And thank you those online. So we'll end the session right now. Thank you very much. Okay. And